Alrighty, gentlemen. Happy days. Welcome, peacocks that watch this later in the week or whenever they finish their work. What we're going to do and what we're going to look at today briefly is Bitcoin over the long term. So I wanted to zoom right out here on a couple of the indicators that I've set up earlier on my certain moving averages, which run over the daily and the weekly. Look at the RSI, the relative strength index, look at the volume. Look at the volume oscillator and how down on volume we are before we usually make an upside leg. Look at the MACD and its incoherent pattern at the moment. I'll call it incoherent because it's just retarded. And then look at the average directional index as well as my average true range. So zooming right out here, like looking at a high level zoom out. What I've got marked here in the yellow and the green lines is the top of the previous cycles. So whenever we've peaked out and we've hit that max price, this up here is a massive wick, so I can't actually drag that up. I don't want off the bodies of the candles. Back at 169, which is kind of irrelevant, but it's good for a TA perspective to see the amount of volume that was firing through Bitcoin back then when everyone was just like wash trading and just doing God knows what with this unregulated thing that was just manic. I'm in high Kanashi, by the way, so I'm not on normal candle. So if you see a lot of green, a lot of red, it's just because I'm smoothed out the candle patterns. If you don't know how to do high Kanashi or read high Kanashi, I'd suggest having a look on any website that can tell you how. So as you can see here, peaked out, pulled back. Every time we've had a pullback, it's usually been about 50 to 80% between those ranges after all-time high. Peaked up again for that next cycle. The vertical lines I've got marked were supposed to be sort of the peaks-ish. Using this red one here of like our cycles before your halving cycle, Bitcoin for the mining particularly. So peaked here, pulled all the way back, came through, broke that, confirmed bull market, back up again, peaked at that 19,000 level back in 2017, and then tanked right off again. What was really interesting with this higher level sort of time frame that I found when I was going back and charting it with certain moving averages and EMAs, which is the exponential moving averages for those that don't know, was when the, I believe, right one, nope. Yeah. So I have the 200 on the weekly time frame. So the 200 weekly moving average. When we've started back here, we used it as support, and we've used the 100 and the 200 weekly moving averages as like this baseline, in my opinion, of what essentially would signal a bull run and then a big cancellation and a flush out of the market when we break those levels. And you can see that in high Kanashi, like really evidently. We broke those levels back down here from literally here, pretty much peaking the bottom at 230. Gained those two levels, back up here, broke it, used it to support through this little range, and then we pushed all the way up to 19,000. Again, drew back, pumped, drew back, came down, there's the level there. As soon as we crossed the 100, again, 1 week, 100 on the close, moving average on the weekly, you can see that max exodus straight down to the 200. It's just like a key indicator. Touch that, used it as support, push back up. This is on the weekly time frame, so big moves. You got to expand your trading time horizon when you look at these charts. But again, here as we're sort of zooming into the current price action where we're stipulated at the moment, used it as support, push back up, regain that level, push through, came up. We've actually come right down and touched it. You can see here. So this is the 100, the light blue. Touched it here, used it as support, bounced off, came up again, rode it really, really hard, used it as support, pushed back up. And as soon as we came down, this was a bit of a black swan. This was March 2020 when everything just washed out. So, you can excuse that sort of black swan event, but it's good to see technically what actually happened was we got washed out all the way down. I think it was a, there you go, nearly 60% drawdown in 1 week. But we've got bought all the way back up past that 200, which we've used to support. We've never, in the history of Bitcoin since it launched, we've never actually lost it, as in like we've lost it and held it, like held below it. So we've always used this key level as support. Now, something that's really, really positive over the longer time frame, if you take this line down here to where our previous all-time high was, around that 19K mark, the 200 weekly moving average is now above it. So if we were to ever draw down from where we are at 39,000 or say 40 Gs, American down past the 100 weekly moving average, I would not see us losing the 200 down at 21,000. I would say that would be the absolute floor and every man and their dog in traditional finance across the world would be having their chance to throw money probably at everything, but Bitcoin would be a massive speculative decision, given that the volume that we've had and seen on these flush outs is massive. You can see the volume dumps off. I mean, there's this huge spike when we've lost this key technical level, whether that was driven by macro or the S&P 500. You can do the correlations and look back. And then we've gained back up again, lost that moving average cluster, lost that 100, and then broken the 200 on that, the black swan with COVID. Again, RSI lost that moving average here when we had that big dump, and the volume oscillator absolutely pounced up. I won't even worry about the MACD because it was so jumping rubbish. And I'll touch on the bottom one shortly when we zoom out. Again, lost that moving average on the relative strength index, and just lost those KISS levels. So there's a rhythm and a bit of a pattern that plays out in technicals. Again, like I said last week, once you pick the things that work for you, stay with them and use them. For me, I've got certain things that I like to double check and triple check in terms of volume, the oscillators that change throughout volume, and the relative strength of markets. So if strength is really low and price is low, or price is going up and strength is getting lower, is it a sign of a weak market and a weak follow through? Is it a bearish divergence, or what's happening to lose volume, and then is it a sign to get out? So I'll jump into this and we'll zoom right in to where I see this at the moment. Volume is, for lack of a better word, absolute dog shit. There's probably no better word to describe it. Like the volume previously throughout Bitcoin's history, and to see where we are right now is just like it's rubbish given what's going on in the macro with Russia and Ukraine and inflation just absolutely through the roof, and the global supply crisis, just everything that's happening in traditional finance. I just can't believe Bitcoin is just so water. It doesn't make sense to me. I thought it would be shining by now and people would actually realise it is what it does and what it can solve, but that's obviously come about as we are tied to the S&P 500, like I showed everyone last week in the video. So I charted these earlier in case somebody got a hold of my screen and decided to scribble on it again. And I'll zoom into this. So as Tristan was leading to in his dollar cost averaging strategies for buying and holding long term over the period, and then how to actually benefit from those strategies with like a 30% take profit level on certain runs through the bull market, and then being able to dollar cost average and re-enter the market with your holdings. When we get these drawdowns, like you can see here, massive pump up, pullback, little pullback, pump, pullback again. How to actually capitalize on that market, me as a trader. And this is on the weekly time frame, definitely not the daily. Daily, and as you go lower into the 12 hour and the 8 hour is something completely different with swing trading. But again, I wanted to just touch on the weekly. So for me, looking at this, these are my zones personally, and I'll show you why they're my zones. I'll go back to normal candles. These are my buy zones, and this is how I structure them technically. So buy zone 1, looking at the previous volumes and the previous candles and wicks that we've had, where we've wicked to, and the moving averages and the exponential moving averages that we've actually touched and broken and then got bought back up on the weekly, shows me that over a short time frame, let's say we had a fresh week, we've got 5 days to go here. Let's say Bitcoin decided to shit the bed, or the S&P 500 decides to shit the bed, and we get correlated with that macro, the FUD that's happening at the moment, and we pull right back. Let's say we touch this 100 weekly moving average down at 36,000. Buy zone definitely, because history has shown me throughout these charts, every time we've come down and touched these levels with certain capitulations, especially like big, nice red weekly candles from, that was the Elon Musk and China FUD, we've been bought back up before the week closes out, and then we push across. And then you can see every candle next to it, if you were to actually dollar cost average in on the bottom of one of these broken moving averages and buy in on buy zone 1 or buy zone 2 when we've hit them, let's say you dollar cost averaged in here with 25% of your holdings, then you went in here with another 25% of your holdings, and you got a DCA level of about 32,000. The next week, again, that's dollar cost average on the way down on this weekly candle. The next week, you would have found yourself up at the peak 25% on your holdings. So it's an easy way week to week to dollar cost average and make money, just trying to actually technically read the market and what happens. Do we have 1, 2, 3, 4, 5 green candles, then a red one before we have a bit of a drawback and the market cools down, because derivatives usually get really, really hot, and funding starts to go really positive. Again, if you don't know what funding is, I would recommend having a look and having a Google and just finding out for yourself what that means. We'll do another video on funding and derivatives definitely in another time, because it goes for a little while and it's pretty hard to understand on certain things. But as you can see, you know, we do get these big green weeks and months, and then we have pullbacks, you know, anywhere between, I would say 20 to 30%. So it's just something so safe, in my opinion, to be able to know your sell zones, know your buy zones, stick to them. Psychologically, I use colors and I treat my money as units, not as money. So for example, if I was a small investor and I had 10,000 units, so $10,000, I'd structure myself a plan that if I enter buy zone 1, you know, maybe I'll put down 2,500 units, and then we go buy zone 2. This is again, so you're not coming out of a place of scarcity. You're not being scared with your money. You know you're a smart investor. You know your technical targets. You know your entry levels. You're literally playing your trade plan, so you're not out psyching yourself into fear and this thing's going to zero. Maybe you want to throw a little bit more and you want to do 3,500. So your dollar cost average will actually be lower than buy zone 1, because obviously the lower you buy in, the more units you get, the better your dollar cost average will be. And then again, buy zone 3, I'll put the rest in. So we're sitting at 600, so you've got 4,000 left. There's your 4,000 units. If we ever got down to something like that, that's how I would structure it. So 25%, 35%, 40% on your holdings. I always, it's part of my bottom dollar cost average strategy when I go in for futures and leverage positions, and how I time the bottom. I use the strength indexes and the volume. It's kind of like really hard to read off volume, because the price can go either way on a vol swing when we get that volatility. Like you can see on the downside, volatility spikes up red because we're going through a sell pattern. So volume, you kind of got to turn your head to it a little bit, look more at stuff like strength, like RSIs, to find out when we're bottomed out. How you find out if we are bottomed out in the shorter time frames, I would definitely take you back to something like this. So what I'll do is I'll just drop a vert line so I can zoom right in. That line, make it yellow. Right. And I'll zoom right in to the daily or even the 8 hour. So here we are. So looking at this, you can see that that's actually that wick of the body of that candle there. And I'll just move it out. Trying to time the bottom, you're sitting here live, watching Bitcoin go red and absolutely tank the market. Everything's dumping 20, 30%. You're sitting here waiting. Volume, look at that candle, spikes all the way up. We get these massive liquidations, which in my opinion would have been people that are long. And as it's coming down, we're liquidating longs and they're being forced to sell at their stop losses. So it's breaking them all the way through, and we've had this massive concave spike. And then you can see here on the relative strength index, if we come from the all-time high, dumped all the way down, and we've broke that bottom, our bottom band there about 30, and then we bottomed right on that point, right on that wick. And then from there, even though we got a lower price action later, the RSI dumped on the bottom of the band, but you can see where my buy zone 2 is. You would have captured this, then you would have captured the rebound. You could have sold anywhere through here. And then again, you could have taken those winnings that you're now a trader, not an investor. You could have sold out through this range and made, if you managed to get 1 and 2 buy levels and you DCA'd, let's say here between 1 and 2, you've made 25% again on the swing back up, which was a short time frame too. This is on the 8 hour, so this is over a few days. 25% up your money, capturing volatility. Again, you would have sold that, not being greedy, happy days. Waited, and why do we wait? Well, you wait for confirmation, not speculation. So you're not going to speculate, oh, it's just a dump, we're going back to all-time high. Happy fucking days. You want to protect your money, protect your investment, and protect your wealth. So wait for confirmation, not speculation. We came up here, we would have looked for a higher high, like Tristan mentioned last week. We didn't get it. We touched that top of the range where we bounced to, and we went straight back down. And we actually broke the bottom of that range again. So lost this, came down, touched it, capitulated straight down. As you can see, RSI, bottom of the range, 30. Excusing the volume again, you've got to sort of turn your head away for the volume. And don't worry about the MACD and that. So this is on the shorter time frame, obviously on the 8 hour. You can get further, you can go 4 hour and you can go the 2 hour, just to really try and pick an entry point, especially if you're trading futures in leverage or you're trying to trade spot. Again, you can trade spot without leverage and there's no chance of getting wrecked. It's just If you buy in a little bit too high, it just means you got to wait a little bit longer to be in the green on the upside. So again, you could have bought through this buy zone too, because you would have sold out through this top of the range on confirmation that we didn't break the range. So speculation is we're going here. Confirmation is we didn't break this. What happened? RSI came up, overextended, came back down, and again on the shorter time frame, moving averages got a little bit extended away from this cluster, pulled back, lost the cluster, RSI lost the moving average, and then we pushed straight back through. So confirmation, I would have been selling right here on that cross, because if it bounced, happy days, whatever. You missed out on a little bit of upside, but if you sold it here at the top, well, you're not going to worry because you've already captured your bank and you filled it up. So a little bit of psychology there, playing with your money. And again, rebought in this area, buy zone 2. Let's say you managed to get the middle again, not the exact bottom or even the top of the range. And then we capitulated. Again, this on the 80 hour, so we had that bounce. Bounce back up, you're 15% up on your already increased 25% position up in just the space of, what's this? 40 days, in a month. So you've gained 25%, then you've gained another 15%. Now you're in entry position level looking for an exit point. Zooming out on the daily, look where we are. You may have come up here and the market was going lower. You may have thought we were going to go lower, but again, you would have DCA'd in here on your first entry position, and you would have been waiting for that buy zone at number 3, which again is very low, and you may not have got it. We re-entered band number 2, and then you may have gone, okay, well, I'm going to put another 10% or maybe 15% and be conservative. That way I've got a stronger position, and you're actually bringing your DCA down from this top line down to the middle of the band. Somewhere around there, you've got a strong position. Again, you can look at all these different on-chain data to suggest that we're going to go back up. Derivatives may be in negatives, which means you're getting paid to essentially long the market. And again, over here, this would have been my key signature, which is where I've drawn these boxes from. So bottom of the bands, sorry, not bottom of the bands, bottom of the previously. So you can always look in history to find out where an accumulation zone may be. And as you can see, every single wick that's touched here, 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 and here, which is where this was previously, that accumulation range, every time we've capitulated down off this one, which was a 27% decrease, we've been bought back up, bought back up. So good strength level for support here. Happy to draw that box straight across, run off history. There's now a liquidity pocket. You can enter the market. And if we do go lower, because of this bull run, really, really hard to enter into because of the the extension and how fast the market actually increased. Again, I would have been, I don't think we would have broken this lower all-time high, but through this range here, that's where I've drawn that green box off this. Again, I know we're on the 8 hour, sorry, but that sort of accumulation, little accumulation range there as we had a leg up, accumulated, leg up, accumulated. So you've got to look for these clusters where people buy and sell, money changes hands as the market cools down. So scrolling across, current position, this is where we are. Again, running off history, and I'll just swap back out to the daily to make it easier. Buy zone 1, buy zone 2, buy zone 3. This is absolute Armageddon in my eyes. If we got there, I'd throw everything I had at it, because just the statistical data and history of Bitcoin, every time it's been this low, it's bounced and run back up. There's not a time where it hasn't bounced and lost, and ever lost this level. It'd have to be something we've never seen before. And with Russia fighting a war at the moment, inflation happening, I just couldn't see it getting that low. And if we did ever get that low, I actually don't know what would cause it. I don't know if one of you boys or Tristan, you want to pipe in on that. I just don't know.
I can't see it. I think if anything, if it would be, if it ever were to go there, it would just be massive, like a technical confirmation that the whole market's just seeing like a head and shoulders playing out in the day. So they're like, I'm out. Because that's kind of that's a lot of the charts that have been on Twitter, right? Like a lot of the charts at the moment are people basically drawing out head and shoulder patterns, going, cool, if this plays out, we're going to Nuketown. Which I still wouldn't see it going to your buy zone 3. I'd see it going to your buy zone 2. Yeah. I think 28,000 would. I think 33,000 would be pretty much 28,000 might be as sort of as low as it goes, because it seems to have bottomed out there on the last couple of market corrections. But yeah, if the 28,000 level doesn't hold, we're Nuketowning all the way back down to 20. I
think the gap, if that was to happen from the 100 to the 200, it would be so much. And I'll just swap back to this. Where's my volume? volume profile, session HD. No. Hold on. Where is it? Yeah, like you can see here, and I'll just edit this first. So as you can see here, like the liquidity pocket when you zoom out from the run up is really, really hard. Like when you see buy zone 1, and again, everyone that we showed last week, if you don't know what this is, the VPVR, I would definitely do some research into it. The reason that I would see it tapping 3, not holding 3, but tapping 3, is that this is the previous all-time high. So there is a lot of orders and you know, stuff set down around these levels. Definitely there will be some traders with orders down there. I reckon there'd be some smart fellas with some big millions, multi-millions down here. Just in case derivatives got hot, the market had a big flash out like March 2020 with the COVID crash, and everyone got scared. That's the only way that I could see it getting that low, but I don't see it staying that low. And you look at that liquidity pocket, like the hole in that, if we lost that weekly, the 100 MA, and then hit buy zone 2, if we didn't get bought back up, I think you would just see like a fear, just a mega fear wick, like the Darth Maul, just fucking down and back up like a Darth Maul candle, just tap. There's just nothing because of the run here straight up. The lack of volume off the bottom of this range through these candles, there's just nothing there in that.
No history, yeah.
So I would definitely see something just fall straight through and then come back up. You know, there'd be so many orders sitting down here, I think, waiting personally. But given that the 200 weekly moving average is now above the previous all-time high, I think that's a really good sign of strength. And the longer the Bitcoin accumulates like this, like, I know it's a boring market, but it's actually a really good sign of strength. Like, people thought it was a Ponzi and we were really like nuked down. I think
if we do truly nuke, it'll be more to do with like S&P and just broader like monetary policies and things like that, which, like, you know, if they actually get around to doing things like reporting the undiluted sort of interest rate, like the inflation, like, because right now they're reported around 7%, but you know, you look at other data sets and a lot of that's pointing towards, well, 13% is actually the real inflation, which is like insane but not surprising with like all the money printing in the macros. So I wouldn't be surprised if there was, like, say, you know, a black swan like event whereby it's just like completely out of Bitcoin's control. Then yeah, it would be like the crash of like the S&P, which would just, again, because it's just everyone would be just hella fearful. Like institutions would be like everyone would be liquidating, everything would liquidate. So it's one of those fearful things. But like the way I would see this playing out technically, and there's a really good fractal just here that I'll grab, and it makes sense to me, and this is what I'm going to explain to peakers right now that are looking for better trading and investment strategies, is with sell zone 1. Why did I put sell zone 1 here? Well, again, we want to wait for confirmation. So if I manage to get my buys in here and here, and I manage to come up, touch the top of this range through this, like obviously this accumulation period in zone 3 here, we've seen orders in before, and we got rejected here, you know, below 50, you know, why would I not enter through these lower levels and then exit the market here at, like, I mean, let's say when you got into buy zone 1 once, sold twice, you got in and re-entered your position size, and you're up 33%, like you said last week in your DCA sort of education, 30% you're out. Let's say you bought here, you're up 15%. What is the harm in selling every single thing you have right here at the top of the range? So you buy support and you sell resistance. You don't do it the other way around. You buy resistance and sell support. You know, for me, I would be happy to buy here, sell at 15% or 16%, wherever you get into this range, wait for confirmation that we've broken the range, retested it, and then you move everything up. And I would say that, like, you know, you're thinking of like,
now go
basically like the mindset that sort of that goes on there, because it was sort of like I was saying, if you're someone that's trading with like millions and millions of dollars, and we know that institutions are, like, getting like a 3 or 30% gain is like significant. Like that's, you know, if you just got 30% of like a fucking $300 million or something crazy like that, then, you know, you've just made like a lot of money. So you've got a lot of that sort of activity going on too, I think.
This is the way I structure my colors, mate, and that's the reason I've done them the same on the flip side, is that my cell zone 1, if I wait for this, and I'll just grab this fractal and I'll play it out so everyone can actually see this.
This is how the institutions trade, bro, because you're like basically more, for lack of a better word, pretty much like a professional trader. So like this is effectively how they're looking at charts, and they're looking at that kind of stuff. Like, cool, let's just see if we can just scout like a quick 15%. Like even right now, I would say like the risk reward's not really like, yeah, the right now the Bitcoin's in a weird place overall, but I think the risk reward's actually like pretty good, like for an entry. Like if you've tightly managed it, of course, like you would need to like be really sure the current level it's at will actually sort of find support and carry on. But if it doesn't, then yeah, it's pretty much as your fractal is sort of indicating, or like at a different point there.
Like that's just theoretically, right? I grabbed this fractal, I know it was further extended like this, but like for example, just for training's sake, for everyone, let's say we did touch this level, or that could even play out, you know, like this, you know, however you like this to play, you know, you can potatoes. But let's say we did, theoretically, and I'll keep it above this 100 weekly. Let's say we did do something like this. You come in with dollar cost average in on the buy zone 1, you get another chance, which essentially you may have got back, you know, let's say something like that. You know, it's not a perfect science, but you try and do your best.
Yep.
Something like that, and then for training's sake, I'll push us into cell zone 3. What you would do is dollar cost average in, we're still in cell zone 1, we're waiting for a re-entry, so we're waiting for confirmation we've broken this level and we can hold, rather than speculation we are going to. It pulls back, okay, cool, we've sold out, we're not copying any of this downside. And you can watch Bitcoin and analyze it like this and trade alts and make more to the upside on the bottoms of Bitcoin when it swings, and get better dollar cost average, bottom dollar cost averaging in, versus you know, buying Bitcoin and making a 10% upside on the volatility bounce, whereas some alts will do like a 15 to 20% volatility bounce. Like, it's insane seeing alts bounce sometimes. But let's say you got into buy zone 1, you've got it here, we've come up, we've sold out, you know, we've come up, we've touched it again, we're waiting for confirmation. We've broken it, you're waiting, confirmation of testing the range again, we've had the pullback. Okay, sweet, it's time to re-enter. We've had confirmation, it looks good. It's holding the top of these, I'll just grab my raise. It's holding the top of these bodies of the candle. So again, touch points, and I'll do another one on candles, but touch points. I'm charting here, back in the history of where Bitcoin was, and again, I can even drag this across here. Bottoms of the bodies of the candles, not the bottoms of the wicks. Bodies of the candles where the market orders have been touched and brought back up to. Strong levels, bottoms of the bodies of the candles. So you draw your lines here off the history of Bitcoin, history of order books, what's happening, what are the strong levels. You come through, this is a good level, touch, support, resistance. The more touch points, the stronger this level. Touch point, support, broken that one, straight down through it, lost it. Nearly used it as resistance, flipped, resistance. This level's a key level, it's been touched 100 times. So as we come through here, we now look at this and we're like, okay, it's come down, it's nearly touched this level again. I'm happy. I'm putting 25% of my units in, 2,500, whatever works out to be your portfolio. And then from there, we've entered. So now sell zone 1, we get rid of that bad boy, and then our buy zone 1 moves up. So that's now where we are. So sell zone 1 goes goodbye. Oh, sorry. Go back. We move back up. And now here we are. We've re-entered the market. Let's go again. The whole idea is to get you in the market, dollar cost averaging in here low, and then getting you to sell out through these top levels. And then like you said, dollar cost averaging in on the bottoms, and then selling the tops. And we just ride the wave. That's what a trader does. Buys, sells, buys, sells, buys, sells. It doesn't matter if Bitcoin's $1 million a coin, and it doesn't matter if it's $2 a coin. We're looking for return on investment, which is a percentage-based return. You know, we're not looking, I want to make 5,000 on my one Bitcoin. Like, you're looking for a percentage return. Not everyone knows that, but that's essentially, as a trader, and what I'm going to do with the Prometheus treasury is trade. It doesn't matter if Bitcoin, I don't care if Bitcoin goes to $10,000. I don't care if it goes to $19,000, because I know how to trade it. We're in this for a percentage-based return on the treasury. Like, it doesn't matter if an asset's, like I said, $1 or $100 billion. Like, we're trading this for a percentage-based return on the treasury assets. So volatility is your friend. As long as you've got good strategies, follow your trade plans, you know where to get in, how to dollar cost average based on smaller time frames, like the 4 hour and the 8 hour. When we do capitulate, we have that volatility to the downside, you know, how you place your orders, and when you are watching order books live on smaller time frames, ready to just press the buy button, you know, and deploy your capital that's waiting because you've actually sold at a better level. And then how to just take profit off the top and use that muscle and not be greedy. Like it's not rocket science, but you need to have a trusted bunch of indicators that you know how to do and you know how to strategize your ins and outs. Going down to here on the daily, the RSI, again, we have sort of touched this uptrend and we're holding. I'll get rid of those. We sort of have touched through this range now. I would like to see us hold this RSI level. I know the price is doing its thing, and we have sort of bounced back up yesterday. We are below all the moving averages, which is a bit of a worry. Volume sucks. Volume's down 9.71% on the oscillator on the daily. Again, the MACD volume looks like it is coming back in the market. We've crossed that zero line. We went negative. We had that dump back after Doke 1 pumped it with Luna. I'm not sure if he's still buying or if he's just waiting for us to get lower, but it looks like the 12 and the 24 might cross into a bullish structure here on the daily for maybe another 2 weeks, which could suggest that we would go up and test this range again. If we can break through those moving averages, you know, we are above the moving average here on the volume, sorry, on the RSI. So it'd be interesting to see what happens here. There's a little bit of like, you know, we're going sideways, we're through the cluster, we're through the RSI moving average, volume sort of dinkering around, and the MACD's, you know, starting to swing a little bit, but not massive confirmations. The other one I have, and I was going to go out to the weekly on this to try and talk about market tops and bottoms, is in history when we look at Bitcoin and its RSI structures of where the bottoms are and where the peaks are. So like RSI peaked here at 90, you know, bottomed out here at 30 on the bottom of the market, came up, peaked at 80, bottomed out here on this sort of black swan at, what's that, 32, so it's near 30s again. And then we peaked out here earlier, which was the big bearish divergence, even though everyone thought that the dump was caused by Elon Musk in China. You can actually clearly see that the RSI, you know, backed off through these two peaks and even got lower, lost that moving average, and the price continued to climb up through there. So that was a big divergence. Just a lot of people were so euphoric in that psychology of markets that they just didn't take note of what was actually happening. So yeah, we've trended all the way down. So every time we've trended down in the RSI off these, you know, those market peaks, we've had a rise back up. Market peaks, you know, every time we've had these pullbacks, we do make our way back up. It's just a matter of time. So, you know, is there a key indicative moment where Bitcoin's going to find a bottom and we actually go full run again? Again, sorry, I'll delete these because they're on the daily. On the weekly, moving averages were sitting flush, you know, on the RSI MA. Volume's down 21% on the week, which is terrible in terms of a MACD perspective. They don't really know what they're doing. We're in this sort of little kerfuffle at the moment. It'll be interesting to see if this paints a bullish structure and we actually, you know, follow this line that I drew previously. But the other one is the average directional index. So over the course of Bitcoin's, I would say, existence, you can see here I've charted this back in 2012. Every time Bitcoin has been this low on the average directional index, you know, and tapped these really, really low levels around 12, we've had these mega runs and they've nearly stipulated, I won't say a full bottom because there was still a drawdown through here, but they've been close to at times where we've had these peaks. Directional index has gone up and then we've come down, we've bottomed out again here. You can see these vert lines if I drop them on. And then again here after March, and then we've had that massive run and peak, and then we've nearly fully cooled off again. We're still heading down, so there's nothing to say that we won't go further, but it's just something to note. You've got these key, you know, sort of levels that Bitcoin finds a bottom at over multi-years of price action, which is what we want to base our long-term investment decisions on good assets with good fundamentals, which is where our team comes into play with all their knowledge. So yeah, that's what I've got on Bitcoin at the moment, man. You boys got any questions?
No questions at the moment, but I think it's I'll just sort of touch on what Tristan said. It's pretty relevant, you know, in that I don't think we'll see a buy zone 3 again until something truly massive happens within the general stock market as well. So the S&P, the SPY, we need a true crash in the market before we ever got back down there again. And in my opinion, the S&P, we see a lot of FUD about the S&P at the moment, but in all honesty, it's not holding up that bad. If you look at it look at it just for the last 5 months. It looks shitty, absolutely, but once you load the fact that a war has started out in that time, it sort of accounts for that. And you go back sort of all the way even pre-COVID, we've only really had one small correction since COVID dumped back in March 2020, and since then it's been a pretty steady upwards run. And look, the general trend is still up for the S&P, so I don't think we're looking that weak as weak as what news outlets and all the rest of it are telling how we look. Because when I sort of zoom out on, I mean, obviously I'm a day trader in the stock market. I get in and out in the space of a couple of minutes, sort of thing. I'm not usually looking at the greater market. I'm looking at everything in 1 minute candles and entering a trade and exiting, and then going to bed within half an hour, sort of thing. So, but when I do sort of sit down and zoom out on that S&P 500, the markets they look strong still, and it's only in this last sort of 3 or 4 months that it's sort of started trading in a sideways range. But it's something that the market's needed anyway, because like I said, we've had one tiny little correction and about two to 3 years of steady upwards growth. So a little sideways action's healthy, and I don't think there needs to be as much fear out there as what there is around the S&P and the markets in general. But obviously there is some bigger macro things that are going to affect where we're sitting. But if I'm just looking at the charts alone, the S&P still looks pretty strong.
Yeah. Look, there is. I'll chart the S&P another day, but just looking at Bitcoin, like I said, technically in the crypto world, there's just certain things that I see that you just can't avoid. Like I just put this, for those that don't know what the whole moving average is, I would suggest having a look at that. Again, that's the HMA, the whole moving average. Go into your settings and put it on the time frame on 1 week. It doesn't matter which time frame you're on. I'm on the daily, but I have a weekly moving average. If you don't know how to establish the difference of key buy levels on individual time frames, we can do a video. We just need suggestions from the community on what they want to know, what they want to learn. So you have the ability here to put a 1 minute moving average on the weekly or the daily chart. So I'm on a daily chart with a weekly moving average because I want to see what's happening on the daily relevant to that individual moving average level on that individual time frame. So I just dropped the whole moving average and typed in the 80 on the 80, and then look at that, bang, and then look at this support, and then look at that. We just tapped out 48.2, right on the nose. Like, please tell me there's not professional traders sitting at their desks going, yeah, look, we got in down here. Let's capitalize our 36% ROI on our $1 million in, or let's say $10 million in the space of, let's say they bought the dip, they bought the fear. They just made, 36% on $10 million. So they made $3.6 million in 2 months. Like, this is what professional traders do. Big hedge funds that trade family assets, family funds. They're sitting here looking at this volatility, just going, yes, sell, yes, buy, yes, sell. Like, one click of a button, another click of a button. Like, this, people just make it too complicated. Like, you just need to sometimes just look at the charts and just look at what they're telling you. Was that a short squeeze? Don't know. You'd have to look on chain and look at the derivatives. Was that a short squeeze? Potentially shorts were unwinding, but again, we don't know 100%. This was Do Kwon. We know that he was putting a lot of buy pressure through Bitcoin, but then he's touched the whole moving average. Like, why would, for example, if Do Kwon had another $300 million or $500 million or $1 billion of Bitcoin to buy, why would he care about the whole moving average?
Oh man, the Do Kwon moving average conspiracy.
Like, do you know what I mean? Like, it's nothing to do with an individual, but when you take 100 professional individuals
Yeah.
are like looking at this stuff. You know, they've got a room full of people and they're all looking at key technical levels. Next thing you know, they start to see, like, I've got the HMA on, but they look at the RSI. We've come towards the whole moving average. RSI's peaked at the top of the band around 70, a little bit extended over the moving average. Volume starts to drop right off here. Look at that candle. It's absolute dog shit on the daily. And we've got the pump on the next one. Again, MACD, like what was happening here on MACD. Look at that. It's sort of like peaked out, even though the 12 and the 24 was still rising through that sideways range. You know, it's kind of had that nice mountain structure. And then don't forget the ADX, that's irrelevant for that. But, you know, you can see the volume spike up and then just go sideways. So there's so many different indicators you can use. But when you just look, like, you can hide. You can just go like that, hide everything. And just look at the suppression just there and the volume that comes with it and just go, all right, sell. Like, it's just, sometimes it's really good to just look at a clean chart and just have nothing on it. I mean, nothing. And just be like, okay, you know, after looking at this for so long, which way is it going to go? You know, up, down, where are we going? Like, sometimes I just take a look at the charts for what they are. So, yeah. That's where I'm at with Bitcoin, man. We're in that really weird zone now where we could go down, but I don't think we would stay down for long because too many people that want to buy in. But again, it would be a great opportunity if we capitulated down to the low 30s to really get some discounts. And for me, potentially open something like a safe leverage position on like 1.5x and just bottom dollar average into that low range, and then just let that leverage position and build on it accordingly. You know, as we go up, take profits through the long, never close the long, but take profits through the long. So our margin call and the liquidation price is so low, it's not funny. And then as we get that pullback, you start to buy the dip on a long, which you can do an FTX really, really well. And I'll make a strategy video on that. And then next thing you know, we've bottomed out and you've got this like, this wicked like entry position pattern on futures where you've come through, we've long the market, we've come up, you've sold 10%, sold 10%, sold 10%, sold 10%, pullback, long, high, low, you know, high, low. And here we long 20%, long 10%, and the next thing we go up, and now we're in the green again. And because we've got these lower levels, we've sold through here, the liquidation point, price point for the long, and I'd love to do this live somehow. It would be really, really cool. But as we sell through here, we long, and then as we go up, we take profit. That was our entry level. Because we've taken profit, the margin level for liquidation on a 1.5x long or a 2x is like fucking zero. But anyway, for price of learning, you know, you sell here, first price point, this bar moves to here. You sell the next price point, the bar moves to here. You sell the next point, the liquidation moves to here. Then as we get the dip, the liquidation level's safe as houses. Then when we start to do the bottom dollar cost averaging again, we go on the way down, we start to long. So then as we enter the position with smaller amounts, so we can really fucking time the market with a leverage position, on the way down we do 10%, moves to 10, 10%, moves to 10. Again, wait. Maybe we drop a little bit lower. And then you go, okay, we're bottomed out. And then you go 25 or 20 and you start to build it. But where we entered originally is now we've got a higher low, and we've got a higher low structure, and we've got a bullish narrative on Bitcoin over a multi-month period on the higher time frames. But now this original long entry position here is actually here. And we've got more money. So you keep going and you do it again. Market goes up, we sell through the top of the range. And now we go here and here and here, and again, we sell out. And then we turn, we top, we start to, you know, turn this thing around. And then as it comes down, as long as, again, we're in an uptrend, the pullbacks are irrelevant because we're selling on the way up, then we're buying on the way down, high, low. Again, and that's what we do, dollar cost average. And then it brings it up. And then next thing you know, we're here. Again, I'm drawing a lot of lines, but we go up and then we start to long. And then next thing you know, we've got this like multi-million-dollar long position that we're not paying futures margins on because we keep liquidating, selling and buying, so we can control the narrative and fees that we pay to the, say, FTX or Binance. But our liquidation level and our entry level point just gets lower and lower and lower. And we can ride one long, literally one long, for months. It's like you don't need to have long, sell it. long sell it. Like you can just build one position with, especially with FTX and their slider. I love FTX derivatives. They're fucking good to go FTX perp. So anyway, that was a lot of scribbles. You boys happy with that? You just want to call it there?
Yeah, bro. That's
was really good.
Yeah, didn't know if you wanted to. I didn't even know if it's worth looking at METIS at the moment. Honestly, it's
Yeah, look, I'll bring it up. I'm not going to harp on too long about it because
there's not really much to say about it at the moment. It's just...
I actually only just added METIS, so I'll just do a quick 5-minute because I'm exhausted. I'm getting up at 5 a.m. again. I just added METIS into, I think this is KuCoin. Oh no, Gate. I just added it into TradingView, so I can actually chart it properly now without Gate just being like spastic. What do we say about this? So we are down. We're down 80% from all-time high. It's fucking really bad. Like it's really bad. But going off what I just showed everyone, you know, the way to structure this, I will do a TA. This is a clean chart. I haven't drawn on it yet. I haven't even seen it. I only added it an hour ago before we started this video. First thing I would do is just go back to history and go, all right, where's the bottom? Far left, start left. Always start in your far left. Here's a candle, there's a nice wick, there's the bottom of the bodies. I'm literally just looking at that. Bang. There's your touch point, support level, $4. Grab another 8. All right, here we go, look through these ranges. Bodies of the candles, that was obviously just a boom candle. You know, you wanna put them on the bottoms, there. Bottoms, top, happy days. And you can see these candles, the daily actually closed on line of that resistance level, and then we pulled back and broke straight through. So on the time frame, lower time frames will actually be a little bit of a battle through that level before we pushed up. Next one. Again, I probably wouldn't bother with the wick, but look over here. Nothing too crazy. I wouldn't really bother too much with this, just given it's just straight fucking up. Like it's a bit insane. I mean, you could drop one on the top like that just for peep's sake. The next one I'll start looking at the top of these. So 2 wicks here, touch point here. So that could be a bottom, nice support level. And then we start looking for these. So top, bottom. Happy to drop a ray through there. So this is all your horizontal support and resistance levels. Tops of these bodies, drop one in there, move across. Resistance, support, flipped. Back to support, a little bit of resistance, but we just pushed through, got bought back up, support. And then look at that. We went through it and we got bought back up. Like, sometimes charting history like this, just so basic, support and horizontal levels, is just absolute key to price structure, because there's pro traders that just don't use much else. They're like, okay, previous price action with candles was here. Like you can just, I'm just going off here. I'm not even looking at the right hand side of the charts and just grabbing these tops of the candles. Your wicks, suppressed, broke through, sort of like a fake out, suppressed. So you happily just drop on like on the tops of these to the left in that range. And then there it is again, touch. And then we kind of had that little transition there, and on the lower time frame, there'd be a little battle between that wick and then that top body. So, and then that resistance little touch point there. So sometimes it's as easy as that, man. And then grabbing these two, green one and the red one, just drop that there, come across, support. Resistance. So 160, and all of that, it's nearly bang on 160. And I just dropped that at the tops of the previous candles. Like it's just METIS. I definitely would suggest the market makers for let's say KuCoin or Gate, they're making money for the exchanges. There's no reason why any exchange would have not dumped coins on the market to capture upside. Like then they buy the lows. Like they trade too. That's what market makers do. They make markets. So just looking at this at horizontal support and resistance levels, like between 259 and 159, that's $100. You know, it's only a $60 spread there, but there's a $100 spread, $60 spread. What's this one? That's a $40 spread. And yeah, we've gone a little bit lower, like it's a $20 spread, $30 spread. So we've had like shorter stuff, but you know, these ones up here are pretty consistent with sort of their $60 to $100 spread range. You know, where we drop to now, like the interesting thing is that the price action did this. Obviously we had a low market cap, but the volume was absolute dog shit. And I say that a lot, so I'm really sorry for people that don't like it, but the volume was really dead and the price action still went up. So it was early investors telling their mates, telling their friends, buying, and happy to buy and pay whatever they want after the unlock. And then look at the volume here on Gate. The volume is more than it's ever been before. So coins are trading hands, but we're just, sellers are just beating the buyers. Where we retrace to, I mean, you could grab the fib retracement, but again, it's not.
I think it's a good exercise to think of other projects sort of at this stage of their life, which have sort of gone on, like, yeah, okay, we're feeding a bullish narrative, you know, so that's a bias from the outset that I'm obviously, you know, that we have to be aware of when we do that. But I think that there are some projects that, you know, you can view them at particular stages of their life, and you can see some degree of correlation as to, say, where METIS is now, because many would be looking at the price, and many are looking at it and freaking out, like, holy shit, like, it's going to nuke. And it's like, yeah, but it's like, based on the scale of METIS's life, like, look how much chart data you've got, bugger all.
Yeah,
like, you know, it's got a long way to go.
Yeah, it is. It's not a lot of data, so you just got to use the tools you can, mate. Like,
yeah, well, that's right. Yeah.
There is so many tools you can use, like just randomly dropping a pitchfork on, like.
But which is, like, you know, actually good that you raised that, because that's one thing that's really important, I guess, for everyone to sort of wrap their head around is, you know, and some of the best advice that I got with TA is become a master of a handful of indicators rather than like a jack of all indicators. Yeah. Like, it's like you say, if you're curious about an indicator, go learn what it does. Like, doesn't necessarily mean to be something that you have to go use, but yeah, if you can recognize a trend in it, you can set strategies with it, you know, you can adjust your approach and your parameters based on your understanding of, like, or interpretation of an indicator, then, like, people should definitely do that.
Yeah. I mean, like, a lot of people would not understand Ichimoku clouds, but
no. I barely understand Ichimoku clouds.
They're hectic. They're like the Kaizen Sen and all these other, like, I can't remember the name.
I remember you tried to explain it to me once, actually. Yeah, it was really interesting, though.
I know how the cloud works, but remembering all the names, like, they just do my head in sometimes. I know the rules and I know how to use cloud, but just remembering the different names, it just does my head in. But we're below the cloud at the moment, and we're pretty separated away from certain speed lines. So yeah, it's like, it just depends, you know, like Ichimoku on something like METIS with a low market cap and can tank quickly, it's kind of irrelevant to a degree. Throwing it on Bitcoin on the weekly, though, is really interesting because we're still in the cloud. We haven't lost it yet, but we did lose it for a period. But just, yeah, having a look, man, like I said, if I was to draw my boxes, you know, I would have said that this was like buy zone 1, and then I would say this, the top of this range where I drew that previous one, I'd say this buy zone 2, and then given the liquidity pocket here, you know, I would say the bottom of this one would be my buy zone 3. Like, that would be my 1, 2, 3. Over a bigger time frame, obviously on the daily. Do I see METIS going down this low? No. If Bitcoin goes to 20, though,
yeah,
all bets are off.
Yeah, all bets are off. 100%. Totally agree.
I don't know what happens when Bitcoin goes to 20 or we haven't been around like that, well, then you haven't been around long enough.
Yeah, I was about to say, this is your first market. You have to ever see that. Like, no, it's never, no matter how many times you see it, it's never not shocking.
Yeah, you haven't been around enough to see the beast in action. So, yeah, that's it. You know, METIS is getting hammered. There's no easy way to do it or easy way to say it. It just is. You know, I think people are fucking heavily front running the May unlock. It's the last one, and I would not be surprised to see some people come out of the woodworks and really try and FUD at their own ability to get in the market. Like, I see that. Like, I could see people paying shillers to be like, METIS is a rug, blah, 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 to really, like, drive the narrative down so they can buy in on the unlock at the cheapest price they'll probably ever get it. Like, in my opinion, from now until the 13th, given certain indicators that I've seen on METIS in terms of RSI and, you know, what I showed the guys last week, if the market turns and Bitcoin does paint that bullish structure and rebound, you know, METIS may be suppressed. It might not go lower, but it may be suppressed a little bit up until the 13th. But then once that last big unlock's done from VCs, there's no excuse now. There's no unlocks coming. It's like they're all done. VCs are paid off and whatever.
It's just team left, is it, after that point, is it?
team tokens after that. So
on loose.
that's every 13. That's every month. So it's there's no excuse. There's no $250,000 tokens getting dumped on the market, and the FDV, the fully diluted market cap, will be updated pretty close, I would say, to what its current valuation should actually be. So yeah, there's no reason after the 13th, in my opinion, that you couldn't buy METIS over a 6-month holding period and do that strategy that I just showed on the screen and make a fucking shit ton of money.
Yeah, man.
Anyway, that's it. Let's call it there, man. Thanks, Peekers, if you're watching and you made it all the way through. This is just what we're going to do. We would obviously like more people from the community to jump on. And again, I don't mind what you guys want me to chart from a TA perspective. It's my thing. I love TA, so I would happily draw over. I don't mind. I'll even do gold. People throw it at me, and yeah, it's stuff for the community. Because I want, to obviously get myself out there, money out there for Prometheus, because we will be actively managing the peak treasury. Well, sorry, not the peak treasury. I said the pro treasury when the time comes. So.
Got cool stuff in the works for that, and there'll be more announcements coming up on that within the next few weeks. So we're looking forward to seeing what you can do in the meantime. So keep doing these kinds of sessions if you're happy to run it. Even I get heaps out of it. I really enjoyed your session just now. I thought it was awesome. So I've no doubt that everyone else that tunes in will definitely take away some value from it. So I reckon do a few more of these sessions, and then we can start to get you guys mentally prepared for the awesome shit that we have in the works.
I don't think people are ready for when
I don't think they're ready.
When we have a bull market again, oh my God.
Oh my Lord. Oh, so much leverage, so much yeeting. Oh.
All right, man. I'll stop it there. Thanks for coming on, guys. We'll see you soon.
Sweet. Thanks, guys.